What's up, guys? Jake Blickenstaff coming at you in another video today. This week, I want to talk to you guys about the 4 different prices of your home, along with the time triangle and what that means to you. So, diving right in, the 4 different prices on your home is obviously we're all trying to find the right price, the price that's going to get your home sold the fastest. Then we have market price. We have appraisal price and investor price. So a little bit more of a deep dive on what those mean is, for our example, we're gonna say $300,000 is the price of this subject property. Usually you'll wind up seeing investor pricing come in between 60 to 80%. So what that means is they're trying to get a deal for the property because they're either gonna try to flip the property or put a renter in there, so that way there's some equity and room for some cash flow. So on a $300,000 house, you're looking at usually about $180,000 to $240,000. So whenever you get those lowball offers, if your property is listed for sale, that's usually what that means. Now, market price, this is usually going to be dictated, not necessarily dictated, but recommended by your agent based off what the surrounding comps are. So the surrounding properties that have recently sold within the last couple of months are going to tell you a lot about the neighborhood, the housing market, and what's going on. So that's going to really help with that. So finding the right price is a combination of whatever's currently going on in the market. Now, your appraisal price has the ability, this range, to be either above or below market price. Now, the reason for that is sometimes your property that's listed for $300,000 can get bid up and up and up, and so you can be up in upwards of about $320,000, and then the appraisal can come back lower than that. Now, so what does that mean? Usually there's going to be an appraisal contingency in most offers. So that way, if you say you're the buyer and you get that property bid up to $320,000 and you have an appraisal contingency, what that's going to say is that the appraisal doesn't come back at $320,000. It only comes back at $300,000. That's going to move your offer back down to $300,000. Now, you also have the ability, whenever you purchase a price, that the appraisal can come back higher. So just be aware that that's always a possibility to fluctuate. Now, with our time triangle, keeping this investor portion in mind, in a traditional market, not right now, because right now everything's pretty hot for the most part, you'll wind up getting that CMA, the comps that are in your area for, like, say, a $300,000 home. And if you're looking to try to sell something really quickly, you're going to want to start about the 75% range, and you're going to get a lot of attraction to your house, and it's usually going to wind up going pretty fast. Now, with selling a property, there's a couple things that you need to ask yourself. So what's most important to you? Is it price? Is it how fast you can get it sold? Or is it the convenience factor? Usually you can pick 2 out of 3 of these. So the normal range is going to be about 85% to 95% of whatever the purchase price, or I'm sorry, the list price of that house is going to be. And sometimes that can take anywhere between 30 days to 3 to 4 months. Now, if you're not really overly concerned about the time frame, then you can usually go with 100% of whatever that CMA is, and then it's usually going to get sold. Now, my recommendation, whenever you do have a property that is listed for sale, if you haven't had any offers within 2 weeks, or at least 10 showings within that same time period, I always recommend a price reduction. So what that's going to do is, price solves every problem that you have in real estate. If you continue to bring the price low enough, no matter what the market is going on in the market, you will wind up attracting those buyers. So if you have any questions, make sure you let me know. Jake Blickenstaff. We'll see you guys on the next one.